Welcome to the channel. My name is Jodie Knight. You can find my live portfolio over on eToro. The link is in the description below for that. But in this video here, we're going to talk about PayPal's price action. We're going to look at the daily chart, the weekly chart. We're also going to take a look at the open options interest. As well as that, we'll talk about my price targets, where I'm going to add, where I'm going to trim, all that good stuff, fair value and all that. On top of that, though, we're going to have a quick look at the general market, what's happening. We're going to look at the economic data from yesterday and what's coming today. And then also we'll take a look at some PayPal news if I can find any. If not, we'll find something else interesting to talk about briefly. Okay, so just a little update on my portfolio. I'm now sitting at about 11.24% exposure to this. Fairly happy with my weighting on this one. I'm happy to remain slightly overweight on this one until we get to our fair value, about $124. But I mean, we're not that far away from the bull market band, so it's not gone parabolic or anything like some stocks out there. Some things are getting crazy. However, there are some things on the chart that I don't like in the short term, but they will potentially provide some additional good buying levels. So we've got this really big bearish divergence here, and price failing to really, make any extraordinary move. It would have been awesome to get to this, to complete the measured move at kind of 95 and then pull back. That would have set us up with a beautiful cup and handle as well, but I'll take a cup and handle at these levels as well. The additional measured move for those we can look at in a minute. So trim areas, probably $95. I'll take a little off the table, but not much. Like I say, I'm happy to go to $124 on this one, and I've waited a long time for this position to play out. It's been a bit of a laggard in my portfolio, but it has been very rewarding. But I can't wait to be fully vindicated on this one. To the downside, places where I would consider adding, we've got this kind of $82 range, historical resistance and support, kind of convergence there. Then below we've got the peak of the volume shelf at kind of 79, so $80. And then we really have the bull market band underneath us, the gap fill. That would be amazing to buy a bunch more shares down there from today's price. That would be a nice 14% discount. It's not the biggest move in stock, but it's a slow and steady eddy, and just getting a reasonable sizing into this one ready for the last push would be nice. So if we pull this down from today's price to where I would put fair value for now, probably should mark down the chart. It's about 44%, 45% move. So it's pretty good for a stock like PayPal. It is a pretty big company. But we're also getting some exhaustion on the MACDX Plus. We're getting some overbought signals, and it's really not clearing. It's pretty undecisive. It's not really falling either. It's just hanging on in there, joining in with the financial assets that have been popping. So they're probably what's helping on this one. We'll take a look at the options and have a look what the big boys are thinking on this one. Just checking my notes on this one. Pullbacks. So yeah. I mean, I think the earnings, they were good, but they weren't amazing. We didn't see too much growth in the areas that we wanted to, but I'm expecting to see that in 2025. So it's entirely possible that when the ads business starts rolling out and everything starts scaling up better, the $124 fair value is going to be lifted as well. But I've always said PayPal is not a long-term hold for me, even though I've been holding for a while. Initially, it's supposed to be a return to the median. The price of PayPal just got way too cheap for the underlying fundamentals of the company. So this is more of a value play for me than the growth stocks that I'm normally talking about, like Tesla and SoFi and stuff like that. CleanSpark is probably hyper growth, but that will also fade off very fast as well. So that one's not going to be a long-term hold. Weekly as well then, almost forgot. So again, we can see the cup and handle forming. That would be really nice. We've got this great big dip here, and if we pull back down to, honestly, the $80 or 75 would be amazing. The measured move on that would be, let me just quickly do it. So if we just pull back from here, kind of, that would be actually pretty textbook getting us to our fair value. So I'm all for a cup and handle there, and I will probably, get some additional sizing on that one just to make sure I'm capturing that move when it goes. Oh, I'm a little bit excited now. So Open options interest on this one, very tight range, which we can see. We looked at the chart and we already knew that things were kind of vary in a range, and it's a very tight one. It's like a $1 range, guys. That I don't think I've ever seen expected moves that tight before. So we've got market makers are going to want to be selling at 87 and 90. So it's going to be very tough for us to pop high without some fairly big news or something that pushes the macro a lot higher. Even if we had some really big macro news where the fintechs made a good push, PayPal's likely going to move with them. I don't know if that's going to happen. The data yesterday didn't make them push to a new high out here, so I think market makers are going to continue to push this one down. So I think downside's more and more likely. Interestingly enough, a lot of the support to the downside is at $74, where I would love price to go. Obviously, these strikes are for this current week, so let's have a look if that changes in the next week. So the chances of low sides faded, but again, a lot more chop in this area. So I'm, like we said when we looked at the chart, we're not expecting any real beast moves here. So, but we could get some downside. Getting high is going to be quite a challenge, but let's go January. So interestingly, by January, market makers are not market makers. The big boys are the institutions and whatnot that use the derivatives markets with volume. $100 peak kind of area as resistance. Now that's all well and great, but it's going to be very difficult to get over over 90. Looking at the volume that we're seeing here, but good support under 84. So again, slightly bigger range, but it's going to be it's getting hard for PayPal to push higher. I don't think there's enough good news coming out at the moment, but that could change next earnings. But that won't be till 2025 anyway. Let's go 2026. So this would be kind of after PayPal rolls out its ad business. Let's see what the institutions are thinking. So a lot of downside goes away. Let's take off the support stuff. That's not relevant when you're looking this far ahead. So $95. Again, we looked at that on the chart. We can see why there's confluence there, although I think by the end of 2025, that price is going to be long gone. But the main takeaway from this is the downside's kind of gone. So I think as the ads business rolls out, we'll see these numbers start lifting up and up and up, which is nice to see. But for now, everyone's a bit bored of PayPal by the looks of it. I've just put on the slide from an old PayPal video from the last quarter's earnings, just talking about the miss on revenue estimates. It was in hand. If you were concerned about the falling take rate, I think you should go listen to the call, especially the QA at the end. They do address their plans and how they've made that sacrifice in the short term for the benefit of the long term health of the business. So that's just me saying definitely go listen to the call there because it's very informative. Other than that, though, eBay checkout, they put Venmo on there and put it high and center. So, I mean, eBay, if you look through the earnings, it's not been a super big contributor for a while. But any additional inflows from that would be pretty good. Seen a lot of eBay ads on TV these days. I think eBay needs to fight to survive now. It's got a lot of competition. We've got Vinted and Marketplace. People don't tend to want to pay to list things anymore. The costs are taken out in other ways. So either way, eBay's not going to be as profitable as it was, but if it can survive, I'm all for that. I still do use eBay a lot for cheap goods. Other than that, though, the PayPal USD to bring speed and reduce costs to cross-border payments with Zoom. Well, that's exciting. I know a lot of people are hyping on about what's it called, Wise at the moment, but this could be really good as an alternative. So the stablecoin will be used to settle cross-border payments via Zoom directly rather than before. The initial deal in April was slightly different, so they've kind of expanded on that and they're going to bypass the traditional systems, which would be pretty good margin. Definitely get a lot more flow coming through PayPal, but I think a lot of people are sleeping on the potential of the stable coin that they're offering. There is a lot of competition that's going to be coming to this area, me check down my list. I think Stripe has talked about it, and Kraken and Robinhood. Now, Robinhood's going to roll out pretty fast. They're moving like insanely fast these days. But important to remember, more than one company can win at something. Not everything has to have a moat. When there's something new rolling out, there's a lot of pie to be split, and really a monopoly isn't the be all and end all. I know a lot of people really want to back a monopoly, but it's very hard in certain sectors to find a monopoly. Finance is going to be very hard to have a monopoly, but one will do better than the others. Hood's got a very diverse offering, but they're a very different business to PayPal. So whilst they will compete in that one little area, I'm not too concerned. And then the big piece in the middle here. So mainly this is just them talking about how they're running an ad scheme for Hugo Boss and Verizon. And I think on here it says about running it through Black Friday. Now that's exciting. That's happening way faster than I thought. I wasn't expecting much movement on ads till early next year. Now, if this is the pace that they're going to be rolling out, maybe we see something hitting earnings for Q3 2024, 2025 even. So that'd be the first one of next year when it comes. So that's exciting. I'd like to be able to finally see some numbers and digest some data on that. That will go a long way to revitalizing the price action on the stock as well, I think. Macro data, what we're looking at, we had quite a lot of data out today. The mortgage data, mortgage applications actually went up. That surprised me this time of year, but good for anyone buying. Get some bargains. Mortgage rate, boring. Yeah, certainly nothing to get overly excited about with the housing sector, but I guess this mortgage application spike is why some of the real estate stocks were popping a bit yesterday. But that makes me happy in my portfolio. So durable goods orders kind of came down a bit. Not great, but not awful. It's still up from the previous month, so can't complain too much, really, can we? GDP growth rate came in on the nose. Can't complain. Corporate profits came in quite low. Interesting. Durable goods down. So a bit of a mixed bag, but nothing too extremely negative and nothing too extremely bullish. So, a bit of the Goldilocks data coming out here. Now, the goods trade balance is garbage. It's been garbage for a while, but I think that will change as the US gets back to manufacturing. It's hard to export services after all, isn't it? So you can't really trade that very well. Initial jobless claims came in low, so that's good. The market's going to like that. We did see the dollar drop when the data came out as well, so that's good. That's going to be a strong dollar makes it really hard for more risk on assets to flow. So that's good. The portfolio did quite well yesterday, actually, off the back of this data, especially when the afternoon data came out. Wholesale inventories spiked a little bit, but nothing too concerning. Obviously, we don't want this to get super high. That would be a bad area to be in again. That shows reduced demand for the goods. Continuing jobless claims kind of came fairly in line. No one's going to niggle over about 17k jobs, are they? Second estimate, I don't really rate these second estimates too much because they can change wildly, but it was lower, which is good. Blah 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 blah. I mean, all the data is pretty much in line. If we just look through, we got some that's real consumer spending came down, but I think we did see personal income go up. So maybe people are saving, didn't spend much because we're coming into the holiday season. Discount galore happens. So sometimes you have to translate what you see in these numbers to what people are likely to do in the real world. I think a lot of people forget that. So, I mean, this is what normally leads to the Santa rally. We have a bit of a dip when numbers start coming down, and then as people start spending again, it gets a bit better. Nothing else really I'm excited about on that. More mortgage data. I mean, in the UK, we could never comprehend locking in for a 30-year mortgage at 6.8, 6.1. That's absolutely crazy. And today we just have the Fed balance sheet. Worth a look, but I mean, I'm expecting them to continue the runoff there. I did want to quickly look at the Fed probabilities, though. They did lift up for a cut. I think they were like low 60s, but now they're at 70%. Something to bear in mind if well, the market's definitely pricing in a cut at the moment, so keep an eye on that one. I did want to also take a look at the trueflation data. I haven't shown this one publicly for a while. I've gotten in a bit of a bad habit of not doing that, but we have had this quite a good spike up from the low of kind of 117. I'm not overly concerned. We're still only sitting at 2.66%, but what I was actually quite pleased with was this here. The government reported rate is actually 2.6. Why does that excite me? Well, honestly, that's probably the first time I've seen these numbers start to actually align with what the government's putting out. So that gives me a bit of confidence that, um, maybe the government's being honest for a brief moment in time. When we got very high up here, we did see the government putting up data that wasn't as bad as what was actually the true reflection of what was happening. So take government numbers with a pinch of salt, because they can be, caressed to look better. They can put seasonal adjustments in and all that rubbish stuff. But we have broken the kind of downward trend we were in, but I think it's going to come down. I think oil's going to come down a lot as well. That's going to be a very big driver of bringing down the inflation rate. And property, the housing market is still very locked up. When that one starts to unwind, we'll see this drop. But I mean, the housing market's been very sticky, so that's taking time. That's going to be lagging, and when that falls down, inflation's going to drop. Obviously, in there as well, we've got some worry of how the tariffs are going to affect things. So we just don't know enough to draw any solid conclusions yet. I expect the tariffs will push up inflation in the short term, but over the long term they'll pay off. But I don't want to go betting any horses on that one yet. That's a wrap. If you enjoyed this content, give it a like. I'm going to go brace myself for the Fed rate decision today. Share this with your mum, your nan, your dad, your dog, and I will see you Monday for CleanSpark on Bitcoin updates.